Okay, so trade recap. I took two trades yesterday on Wednesday. So let me start off with the bias. Okay, in a daily time frame, my bias was bullish because price made a bullish SMT here, and in a weekly time frame, we swept out this low and we got into this weekly order block and we already filled the monthly bullish range equilibrium. Okay, and in a daily time frame, price made a equal highs to take like higher time frame bearish SMT with NQ, ES. So that's no longer work. Okay, so because we made a bullish SMT, so I was expecting like daily to react off of it or close um inside the bullish Ferrari gap and daily break of structure to the upside, and it did a daily break of structure to the upside. Okay, and in a 4 hour time frame, that caused me to think we price really can make a daily break of structure is we in a 4 hour time frame we just inverse this bearish Ferrari gap. Okay, we closed above this bullish, bearish Ferrari gap. That's a really bullish sign. Plus, we did a bullish SMT. So NQ made a lower low, ES made a higher low. So that's a really bullish sign. So I was no longer expecting a bearish price points off of this daily bearish Ferrari gap. Okay. In a hourly time frame, um, price was pushing, and yeah, and like after the New York Stock Exchange open at 9:30, price already swept out these highs, so higher time frame bearish SMT is no longer work, and price already made a bullish SMT. So I was thinking like, yeah, my bias is bullish for the day, okay? But the one thing is that price have been pushing up all day long. I was expecting some retracement down to the hourly range equilibrium, and I okay, so when I entered short to catch the hourly retracement down to these hourly bullish Ferrari gap, price just pushed a little bit higher and then just retraced higher into the retraced lower into the hourly range equilibrium. Okay, and then we pushed higher and fulfilled the bullish buys for the Wednesday. Okay. Okay. So I was thinking like, okay, Tuesday I think made the low of the weekly candle, and even though Wednesday swept out the Tuesday's high and Monday's high, equal highs, and then we already hit the daily bearish Ferrari gap. Like I still wasn't expecting some like reversal to the downside because Wednesday can be the expansion. So this was the beautiful expansionary day Wednesday. Okay. So in a lower time frame, I was looking for a silver bullet bearish Ferrari gap, but like when the silver bullet bullish Ferrari gap created, price just inversed that. So that's a very bearish sign for me to go short. Okay, so where I entered short was like based off of 1 minute breakup structure, mm, right at this inversion gap. So I took short, price swept some 5 minute lows and hit the 15-minute bullish Ferrari gap, and then just price just reversed against me. So that's when I took the second trade, which is based off of. So I know that price is unwilling to give us a reaction off of this 5 minute inversion bearish gap. So why not? I should long. So I took long off of the 1 minute break of structure, and that was totally wrong. Okay, why? Because we already hit the daily Ferrari gap. We already have a bunch of hourly lows. Our hourly Ferrari gaps to get filled and lows to get filled, and area of accumulation that can be checked. And finally the hourly range equilibrium that needs to be get filled before pushing up higher. Okay, and so yeah, so like after the sweep of liquidity, price did 1 minute BPR, bearish BPR to the downside with a break of structure, retraced back to the BPR, price did reactions off of it. So that's when I should have taken the entry like this, okay? So I should have waited a little bit longer. So even though price did a 5 minute bearish inversion gap, I was still kind of hesitating, and this trade was completely better, bro. Liquidity sweep. And yeah, even though we did a 5 minute break of structure, price pushed higher again, swept some liquidities, and then we pushed lower. Okay. So the first trade that I took was kind of hesitant, and I got stopped out, but still could have taken some profits off of, like these lows. But the risk to reward was kind of not the ideal, so I just hold it. So, but like one good thing about these two trades is that I cut both of my trades losses early at the small, because once it retraces back to the inverse Farai gap, if there is no reaction, there's no point in holding all the way up to this point. Okay, so I cut my stop. I closed position off of here after this um engulfing bearish candle to the downside got eaten by bullish engulfing candle. So I closed it. And then on the second trade that I took was based off of this break of structure. And after this break of structure on the second trade, price retraced into like made a equal low and little bit of drawdown, and then pushed higher, swept lows. Where should it go after liquidity sweep? Generated liquidity. So prices only move to fulfill four things: to fulfill equilibrium, to sweep liquidity, to rebalance inefficiencies, and to generate liquidity. So price generated liquidity, pushed higher to liquidity sweep, and then reverse break of structure 1 minute, bearish BPR, retraced back to it, and then dropped. Okay, so like these are this one is the potential trades that I could have taken, and yeah, so that's the two trade recaps that I took, and both are losses. And I cut the position earlier. I cut my stop loss early, so that's a good thing about it. Okay, yeah, that's pretty much it.